Basically, I'm gonna show you some good technicalities to use in your trading. So first of all, we're gonna start on the weekly. And you can see we've been pushing up quite heavily on GU. But what I wanna mark out is this wick here. You can see we moved up into the premium of it, and we had our rejection on the 68%. What I also want to highlight is around here we have the 60-day IPA. If I just show you, this is from the lowest point in the market made. We have 60 days going across, and around here we just marked our 40-day off. So this is the high, and then we just swept it. So we just swept the interbank price delivery algorithm. The 40-day high that was priced has just been swept. And now what I want to be looking for is the shift in sentiment, which we can obviously see is happening. And if we want to integrate candle range theory, we can see that we had a candle range high here on the daily, and then we got it on the low here as well. So CRT high, CRT low on the daily. If I just mark this out, there we go. Cool. So what can we see? You can see that we have a daily fair value gap. It's unmitigated down around here. This is our weekly low, and then obviously you have this overlapping key level as well down here. But after we mitigated this, we can see we've instantly had a rejection from this level, which is interesting. But what I do want to highlight is this swing point over here. So we make a high high, we make a lower low. So this is our breaker formation down here. But this is our main swing point. So you can see the swing, we made a high high and a lower low, breaking out of this range. And now we can use this for price projections. So with this price projections, we can begin to see where market can shift. And specifically, the 1.5 is the area for a target, but then we retrace after it. You see we hit it, and what happens? We go back down 0.5%, and then we instantly have our, rally. But a rally into our levels, wasn't it? It was our wick. So after we formed that, you can see we began to have our instant rejection back down, literally at the level 2. So level 2 is normally where you take your second profits or whatever. But on the higher time frame, it's also where we can have our retracements form as target has been reached and our key level has been reached. We also have down here our new breaker swing point. You can see that right here, form a higher high out the range and a lower low breaking past this. And we can use our standard deviations, and look, you can see the CRT low is at -1, and our weekly low is here. You can see we have an additional sell side on 1.5. 2, we start moving into the daily fair value gap, and 2.5 aligns up with encroachment, I believe, or somewhere close to it. I mean, look at that, exactly. 2.5 is the consequent encroachment of the daily fair value gap. So now we've reached this 2 on our buy side of the curve. Now we're looking at the sell side of the curve. That's what I'm looking at personally. But this is where we're going to begin to see price start folding down towards our levels, as we've basically reached our key target on the intermediate time frame, and now we need to retrace back down to our PDRAs after taking out external range liquidity and start falling back down to internal range liquidity, being that daily fair value gap. I'm also taking out of that price IPDA 40-day high. So now what I'm expecting is Tuesday to basically either it's going to take out these buy side up here, or it's going to hold within this breaker level, as you can see here. So the breaker is probably what I want to see being held time being. I mean, look, you can see how the bodies literally respect the 50% of that hourly breakup. That seems going through. So what I do want to see is tomorrow that we probably hold this break. I probably don't want to see this price continue. I want to see that level out. I want to start seeing us reach towards our daily CRT lows. So I'm going to begin looking for order one for a continuation move to the downside, but I want to be striking above midnight for myself, as that's where a lot of institutional order flow places their orders above midnight. As midnight is it's a price that is referred to a lot for repricing, especially when we have this continuation and we have heavy sell side pressure coming in on GU. If we go on DXY, let me do this. Let's go to the daily. So yeah, see literally the same things happening here. You can see that we've got our CRT high up here. Now you've got our CRT low down here. We go into this level down here, which is basically our order block. So if you measure the 50% of this, see we didn't reach it. Instead, we stayed up in, what was it? Yeah, we tapped into about 61%, something along them lines, and we've had a rejection coming in for that. So what I'm expecting is throughout the week we should be able to retrace up into this level. We've already touched the midpoint, but I want to see a model one obviously form inside this wick here, respecting the 50%. So we go down, respect the 50%, and then push back up. See the highs up here. And obviously similarly goes with here. Go here. See that measure from CRT high to the CRT low. You can see that we already purged the 50%, as that's what's created the break swing point. So once again, we're going to be looking for a move into that wick, basically, right here, holding below the 50%, and then moving down to finish our market maker sell mode. So let me know if you enjoyed that video, if it clears some things up about how to look at price in a logical manner.